Buy-to-let mortgage rates continue to surge to a 12-year high, giving fresh blows to landlords. On the other end, we also got tenants where rental continues to increase in prime London. So are there any winners in the current rental market in prime London? In this video, I'm going to share with you the insights and the data that you need to navigate the prime London rental market. And if you're a landlord, make sure you stay tuned, because I'm going to share with you exactly what our partners are doing as they come towards the end of their mortgage packages so they can actually secure better rates than what they're doing in between. Stay tuned. So in Q2 in prime London lettings was very much like Q1 in that we had a high growth, but the pace of that growth was much slower. We have annual growth of 8% with a quarterly growth of just over 2%. Now, of course, if we put this into context, where we had growth of 30% in Q2 of last year, and rents in prime central London grew strongly in Q2, up by 6% compared to the Q1, and when we look at the annual growth, it's up by 12%. And yet there were smaller increases when we look at prime inner London and prime fringe, with inner being at almost 5% and fringe being at 8%. And LonRes reports that yields across prime London hits a 4% this Q2. Of course, this is lower than the Q1 this year, but substantially higher than pre-pandemic levels, which was around about 3%. As I keep on saying, I've never seen yields in London this high before. Of course, LonRes says 4%, but a lot of valuations that I'm doing out there helping investors actually hit a good 5%. So lettings activity in prime London remains very low when compared to pre-pandemic levels. In fact, if we look at new instructions in the lettings market, it actually did increase in Q2 compared to Q1. However, it did fall over the course of the year of around about 6%. So the number of properties going under offer is down by around about 8%, and new lets agreed are down by almost 25%. It is important to take into consideration that we're still getting strong demand when it comes to rental properties in prime London. It could be that a lot of rental properties are actually getting let without even hitting the market, so without even going as a listing property on the portals, which of course this data is not being recorded. And make sure you stay to the end, because I'm going to share with you exactly what our partners are doing to avoid the very high interest rates. And so LonRes reports that the average discount to asking rents across prime London is around about 2.4% this quarter. That surprised me, because we continue to see 100% at the moment, the same we saw last year. But of course that can be landlords being unrealistic with their rental price. Broken down by neighbourhood, discounts in prime central London are higher than other areas, suggesting that higher value markets are seeing slightly weaker demand this year. Comparing the first half of 2023 to last year, discounts have grown in all PCL neighbourhoods, and the minimum of 44 reached in April 2022. The difference between houses and flats was consistently in the 15 to 25 days range until 2020, but like many metrics, the pandemic had a significant impact. And if you are a landlord or a tenant in prime London, leave me a comment below. Let me know what your experience has been, both with rental increases, but also as a landlord, the impact with mortgage increases. So as a quick recap, we continue to see strong demand in the prime London rental market. Of course, with that low supply, rentals are going to increase in prices. We've seen that this year compared to 2022, and with Q3 typically being the busiest time of the year for the rental market, we're probably going to see rental increasing for the remainder of the year. So the time to let houses continued with its longer term trend into 2021 before falling steadily in July 2022 to a low of 54 days. By contrast, demand for flats dropped quickly in 2020, with the average time to let increasing to 90 days by May 2021. The difference between the two properties in June this year was 23 days, back in line with the typical pre-pandemic level. So what do you do if you are a landlord and your buy-to-let mortgage package is coming to an end? Well, our landlord partners are doing exactly this. They're not rushing to get another mortgage. They're being left with the current mortgage provider at a variable. Yes, I know it's going to be a very high variable rate, yet bear with me. What they're then doing is they're putting their property in a short let. Short lets can be overwhelming, which is why they're putting it with an agent. Now, with that money that they're getting for that short let, they're more than compensating for the high interest rates. That way they can buy a little bit more of time and be out there shopping around until they get the better rate that they deserve, of course, in terms of the interest rates. I hope that's helpful. And as ever, if there's anything myself or my team can help you with, please reach out to us.